Yo, what's up all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades, the home of the #1 stock market trading and investing channel on all of YouTube. On this channel, we love talking about high growth, small caps, high growth EV stocks, clean energy stocks. But in today's video, we're going to be doing something a little bit different. We're going to be talking about a retail stock. What the? A retail stock? What are you talking about? Woosah! This retail stock, I know retail, it's not the sexiest sector in the world, but this one retail stock is different. This stock has literal 3, 4, 500% upside because it's been beaten down so bad. It's trading at such a low valuation compared to its numbers, compared to its fundamentals, that this company has unlimited upside potential because it's been beaten down by several factors, including the e-commerce wave and the old Nordstrom Rack, but it's turning around. It's focusing on the right things. It's building its business model back up, and I think this company over the next 2 or 3 years could be one of the biggest deals in the stock market. I literally believe this stock is one of the cheapest, lowest price stocks in the entire market compared to its peers. This is a company that has been around forever. It's a staple in America. It's an American staple, and it's not going to go under. People are scared to invest in retail because of what's happened with Sears, JCPenney, GameStop, companies like that have been absolutely decimated. But there are still some gems out there. There are still some companies that are smart, ran well enough, have a good enough executive team that they realize that they need to make some business model changes, change some things with their company, focus on online sales, build a moat that will keep them alive and keep them growing and get the stock price back to where it used to be. So in today's video, we're going to be talking about my top stock to invest in long term, buy it, hold it, and keep it forever. Because this is a company that if you buy today, just leave it alone, it's gonna do work for you. It's gonna make money for you. Look back a couple years later and it's 3, 4x where it was today. As always, let's secure that bag by making smart investments and sound trades. Let's get it and roll that intro, baby. What's up all my trader and investor homies? We got a different kind of video today covering a different kind of stock. You guys know on this channel we love EV. We love high growth companies that are building that foundation to grow off of, getting in early and riding the wave higher. This is a different kind of investment, but I believe this company has massive potential, 3 or 4x potential over the next couple of years because it's been beaten down so much, but the fundamentals are still there. The company's business model is still sound, and it's just too cheap. It's just flat out too cheap. But before we get started, do me a huge favor as I put a lot of time, effort, and research into these videos for you guys. And all I ask for in return is to go ahead and destroy the like button, give it the old Touchdown Trades snake eye jab in the eyes. Just start going down there and clicking stuff. I don't care what you click, just click everything. The like button, the subscribe button, the notification bell, just click some stuff. The ticker we're gonna be talking about today is this JWN Nordestrom. And you're gonna be saying, Kevin, this is a retail stock. Retail is... But hold on, let me explain my thesis on this and tell you why. It is trading 3 times lower than it should be. This is a 3x stock in the next couple of years, and I'm going to be positioned in it, and I'm going to tell you why in today's video. Nordstrom, it has absolutely been decimated. Back here in 2016, we're trading at over $80 per share, and currently we're trading at $13 per share. So why the dramatic decrease in the share price? Why has this stock crashed? We had e-commerce come in and kind of demolish all brick and mortar retail stores. Investors in retail got scared. They panicked. When Amazon started becoming the behemoth that it is today, investors just sold out of all their retail. And in a lot of those cases, it was smart. Look what happened to Sears. Look what happened to JCPenney. Look what happened to GameStop and companies like that. But Nordstrom is different. We're going to talk about why Nordstrom is completely different from a business model perspective than those other brick and mortar retail stores. So the e-commerce wave had us pull back all the way down from 80 back down to like $40 a share, a 50% decline in the share price. Then back here in 2021, we were trading above $40. And then you all know what happened. The pandemic, the Nordstrom Rack came out to play. It started growling at all these brick and mortar retail stores. It started growling at all the restaurant stocks, started growling at pretty much every stock in the entire stock market, showing its claws going like this. If you see the Nordstrom Rack coming at you, and you're a stock, you're a retail stock, and it's got its big choppers out and its claws pointing at you, you're going to get scared. And Nordstrom was no different, and it sold off from about the $40 level all the way to where it's at today at about $13 a share. So why is Nordstrom different than these other brick and mortar retail stores that have filed bankruptcy, that have gone out of business? Why is Nordstrom different? Nordstrom is completely different because of their customer base. Let's take a look at their website real quick and I'll tell you what I'm talking about. Okay, so let's just click on women and let's go to Coats, Jackets, and Blazers. We pull this up and we have higher end stuff, right? It's nicer products. We have high-end products sold on Nordstrom. Gucci, Ferragamo, Burberry, all your nice high-end apparel, cologne, jewelry is sold on Nordstrom. The purses, you got Louis Vuitton, you got Cartier, whatever. I'm not a big fashion dude, but I know Nordstrom is higher-end products. Who's going to Sears to buy an oven anymore? Who's going to Sears to buy a jacket anymore? Nobody. Who goes shopping at JCPenney? Nobody, because you can order that stuff on Amazon. It's just, or eBay or wherever you want to shop. Eastbay online retail has killed those stores because everybody is selling that same product. Nordstrom has a different customer base and they're selling a different product. They're selling higher end merchandise, which creates a moat around the company, around the business model that is very hard to penetrate. They also realize that they need to transition from all brick and mortar, mostly brick and mortar, to a more online approach, which the Nordstrom Rack has kind of boxed them into a corner and made them realize that they need to make that transition. Let's take a look at some of their approaches during the COVID crisis. Let's take a look at some of their approaches during the recent pandemic. We have preserve and enhance liquidity. So you're trying to hang on to that capital, not bleed out, and be able to maintain, survive, so you can reamp once stuff opens back up. Deliver profitable sales growth. They're going to try to transition, cut some of the losing stores, close some of the losing stores down, and transition that effort to online retail. The earnings and cash flow is exceeding expectations. Cash and liquidity. They have $185 million of operating cash flow and $1.3 billion of liquidity. So even after all of this stuff has gone on, the e-commerce wave, the Nordstrom Rack crushing retail, this company still has tons of cash on hand. Inventory execution, improved merchandise margins and inventory realigned with sales. What I'm talking about, the higher end merchandise is going to be the moat around this business model. Let the other guys play with the Nike, that kind of stuff, which every retail store sells, and focus on your higher end stuff. Operational efficiencies, 20% reduction in overhead expenses relative to last year, aka closing some of the failing stores, cutting back the cost of having to hire people to run those stores, paying the lease on the retail stores. It's just too expensive if the retail store isn't producing. If it isn't bringing in the money, just close it down. We are building on the strengths of our Nordstrom and Nordstrom Rack brands seamlessly across stores and online. Nordstrom Rack is kind of like their discount store. You could compare it to Marshall's, but it's much better than Marshall's. It has much better merchandise than Marshall's or Ross. Marshall's, Ross, TJ Maxx, they have also survived this onslaught on retail because of their discount offerings. And Nordstrom Rack is better, in my opinion, than those 3 stores. So I believe they should keep the Nordstrom Racks open, kind of shut down most of the failing big Nordstrom stores, the higher end Nordstroms, and transition those customers to online while leaving the Nordstrom Rack open, because the Nordstrom Rack is more successful in-store brick and mortar. And for all you dividend investors out there, Nordstrom, they're going to be paying a dividend. So not only could you get a 3 to 4x return on your investment, in my opinion, you can also be getting dividends. It's just a win-win situation. I have an earnings transcript call pulled up, and there's a very important point that I want to go over that the CEO said during the transcript call. He said, in our digital businesses, traffic grew by double digits year over year. It sequentially improved from quarter 1, indicating signs of increasing customer demand. As we experienced last quarter, we have more than 50% growth in new Nordstrom customers through our digital platforms. We also increased customer engagement of contactless services such as curbside pickup and returns, which represent 1/4 of our order pickup volume. In total, order pickup is approaching 15% of Nordstrom.com sales. So you can go on Nordstrom.com and place an order and have it brought out to your car. Why is this important? Because if you're buying a $600 jacket from Nordstrom, you can go pick it up at the brick and mortar retail store, buy it online, go pick it up, and then if it doesn't fit, you can return it curbside. That is absolutely huge. If you're buying a high ticket clothing item, you want to make sure that you have the confidence in order, if it doesn't fit or you don't like it, you can return it. Nordstrom is one of the only stores that has the ability to do something like this, sell higher end products and be able to return it in store if it doesn't work out for some reason. So the fact that these online sales are growing at such an exponential rate is huge for Nordstrom. And I think investors are overlooking this sector as a whole, and primarily Nordstrom, because of just the bad stigma of investing in retail has gotten over the last few years because they've been beaten down so badly. But as we see these big companies like Nordstrom who have a moat, they have a business moat. That's very important. Not any store can do what Nordstrom does and sell these higher end tickets. But Nordstrom has that advantage of being able to sell high end products to high end customers. And I think this is going to carry them and bring them back to trading at the valuations they were previously, up near $30, $40 per share. The CFO also said, we benefited from the continued progress we're making on permanently reducing our cost structure, in addition to planned expense savings of $200 million to $250 million at the beginning of the year, aka close down some failing stores, cut those costs. The revenue is already there. Last year, before the Nordstrom Rack, they did $12 billion in revenue, but they still lost money because of obvious circumstances of having to shut down stores and that type of thing. The revenue is already there. The only thing this company needs to do is realize that they need to cut costs, shut down some of the failing stores, and this company will be fine. It can even grow. This can even be a high growth company because they can transition to online sales. It's going to the moon. We also have hedge funds buying Nordstrom left and right, which is a sign that the smart institutional money sees what I'm seeing. They also believe that Nordstrom has potential to cut the cost, keep bringing in that revenue, and to build the company back to stronger than it ever has been before. I like to see smart money buying stocks that I have interest in. Just take a look at the numbers and it tells a story for itself. We had sales of $12 billion. We only have a market cap of less than $2 billion. So we're trading at a price to sales ratio of 0.16, which is dirt cheap. I mean, that is filthy cheap. A forward PE of under 9, which is also cheap. So all this company needs to do is cut the losses, get rid of the failing stores, and this company's trading at $40 a share. I'm telling you, this is such an easy fix. If the CEO knows what he's doing, and I firmly believe that he does, he cuts some cost, he focuses his attention on online retail while leaving some working stores open for returns and curbside pickup, focus on the Nordstrom Rack, focus on the online targeting, the higher merchandise sales, the higher end customer base, and this company is going to survive. This is no Sears. This is no JCPenney's. This is no GameStop. This company is nowhere near bankruptcy, and it's trading at bankruptcy prices. So we're getting an absolutely a steal when we're talking about this Nordstrom. All right, let's talk about my personal investment plan with Nordstrom, what I am looking to do personally, and I'll put a price target on it. So we have sold off heavy. This is a weekly chart we are looking at. This is back here in 2019, trading above $60 a share. I want to see this thing start holding. Even if it continues to drop, I'll add, because I just have belief this company's not going out of business. I have a 99% belief that this company will not file bankruptcy. It's just the business model is just too sound in order for that to happen. So I think we've pretty much hit a bottom here, and I'm buying down here towards the $10 level. 10, I'll add on the way down towards 10. So I'll probably start a position down here towards 12 on any pullback and add towards 10. And then I'm looking for this thing to head back up over $30 a share. So I'm putting a 12-month price target of $30 per share on this Nordstrom stock, which is crazy to think about. That is over 200%, and that's on a retail stock. So I am saying that I think this retail stock has 200% upside within a year. That is not normal. That is not typical, but I love this company, and I think it's going to the moon, and I think the numbers point to this. I think the valuation is so low right now that if they just do some things right, they don't have to nail it on the head. If they just transition a little bit more to online, this is a $30 company. In the next 2-3 years, I could see it trading at $40, $45, $50 a share. So the potential for this Nordstrom is there, and I'm going to be investing in it. I love y'all, you guys. I love y'all a lot. I hope you got something from the video. If you did, make sure to hit that like button for me. If you're not yet a subscriber, what in the world are you waiting on? Get involved with the #1 stock market investing and trading channel on all of YouTube. I'll catch you guys in the next video. And until next time, peace.
Drop.